Hello traders, Gary Wagner here, just before 2 o'clock in Honolulu, 7 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the island. It is the 13th day of November 2020, and this is the Daily Report for Gold and Silver. Our weekend review, and what a week we have seen, especially considering Monday's drop of almost $100 and a good recovery of about a third of that. On today's show, we will cover in detail the support and resistance levels that we are seeing in gold and why we believe that it might be the right time next week to purchase it. Also, at the end of the show, we will talk about Bitcoin, and that will be by Joseph Wagner and the Bitcoin Minute. But first, to the price board. Traders witnessed a modest recovery following the dramatic sell-off on Monday. Currently trading at $1887.20. That is a net gain of $13.90 or 0.75% in today's trading. When we look at spot gold, that is trading above futures, as we noted yesterday, at $1888.80. It is still active, up about $12 on the day. Silver also scored a nice gain of about 43 cents, 1.8% in terms of the gain. Current print is $24.74, and that was aided with mild dollar weakness, down about 0.25% at 92.75. Bitcoin futures now trading above $16,000 per coin. This is, of course, off of the CME's futures contract, $16,360, and that's after today's net gain of $120. This first chart is a daily candlestick chart of gold futures, and what is significant is the fact that last week of September, the lows that were achieved then, along with this most recent week, had pretty much equal lows. So we can definitely label this as a double bottom. The fact that that occurs at an important fib level, which is the 38.2% retracement at 1845, really tells us that that is a strong area of support. While I believe that the technical indicators we spoke about, meaning the double bottom as well as a significant fib level, should be a strong support level, the level below that would be the 50% retracement. And what is interesting about that retracement is, first, the number is 1770, but you can see that it acted as a point of resistance during a period between, call it April and June of this year. We have just added simple moving averages, a 50-day in green, a 100-day in magenta, and we can see that without a question, these two averages have definitely been moving together, with the 50-day moving down and the 100-day moving up. Whether they cross or not is something that we would determine next week, but I would look for them to begin to move back apart if, in fact, we see higher pricing next week. When we add the MACD, the moving average convergence divergence, we can definitely see that the market is oversold currently, and that is also a technical indicator that we could see higher pricing next week. We are still looking at a daily chart, although this one is a Henkinashi, or commonly referred to as a Japanese average chart. The key difference between that and a candlestick is that this type of chart fixes the open as the midpoint of the prior candle. In the case of a daily chart, the prior day. What we can see is that we have these long red candles at the beginning of the week in the sell-off itself, this being, of course, Monday right here. You can see there's an absence of upper wicks, which is a bearish indication. You can see that yesterday's activity, there is a very, very small but upper wick, and we have our pivotal candle today, which is a small green candle, like a star in terms of size or a spinning top. And all of those reasons combined are telling me that there is a high likelihood that gold pricing has found support at the lows achieved this week and has been trading off of that. More importantly, it should begin to move higher next week. When we look at a daily Fibonacci chart of silver, there are definitely parallels or similarities between what we just talked about in gold. First of all, you have Monday's dramatic sell-off as being a very long lined candle with a very thin body. That is followed by the absence of a wick on the two following days, meaning Tuesday and Wednesday. It gets very, very small on Thursday's activity and then pivots to green today. And that is absolutely a signal that we could see a pivot or key reversal in prices next week to the upside. As far as our current support and resistance areas go, we will look at silver first. We absolutely believe that there is major resistance at $25.75. That is the 23% fib retracement. And we have support at 23.05, and that is based upon the Fibonacci 38% retracement. In gold, although the numbers are different, they occur at the same Fibonacci levels. In terms of a support level, it is at 38% retracement, made stronger by the identification of this double bottom. That is where we are currently pegging strong support. Resistance really occurs at $1,940 per ounce, and we can definitely see that when we look at these series of tops that occurred throughout October, where it absolutely acted as a strong resistance area. Although we broke above it slightly at the 1st of November, it clearly illustrates strong resistance, as this was that highest price point, which occurred, of course, on Monday when the market sold off by almost $100 in a single trading day. Although this weekly candlestick chart clearly illustrates the fact that this was a week in which we saw a price decline, it is the dailies that are telling us that we found support at these lows and are now trading up above that. This represents the close right here and the open on Monday. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.
As mentioned in our pricing segment, Bitcoin has recently just breached the $16,000 per coin threshold, a price it hasn't seen for over 2 years. Now, this is a weekly chart I have up, and we can see the lows in March that came in around 4,500 is a long stretch lower than where we see pricing now. If we go ahead and compress this weekly candlestick chart, we can compare it to the rally that occurred in 2019 and see that it is dwarfed by the gains we witnessed this year. Bitcoin hasn't seen this price since it fell from its all-time high at the start of futures trading in 2017-2018. Now, we know that what goes up must come down, and if we go ahead and put in a fib retracement from these all-time highs to the all-time lows, a few numbers pop out at me that could spell resistance for Bitcoin in the upcoming week. Now, I've gone ahead and done that, and what I have noticed recently is that Bitcoin was destined to find resistance at some point, and it seems to have found it at this 78% level. I don't think it's going to breach beyond this before a correction occurs, as it has already breached so many of these levels without a deep correction. And in a ever volatile market such as this one, when it comes down, it is likely going to be a free fall. So where would I look for support to occur at? So I would look for support to fall into the market. I would look for it to fall to at least the 50% retracement, possibly even the 38%, as this is an area where there is a significant gap. You can always find out the latest news on Bitcoin futures by simply clicking the icon at the top of our website. You will get our most recent articles as well as our recommended proper action. This has been Joseph Wagner with our Bitcoin Minute.